Hi everyone, and welcome to episode 60 of my live trading series. I think either 59 or 60. I'll have to check. It is Monday, November 8th. It's around lunchtime. I'm going to be showing you my experience with the wheel strategy. I'm going to be talking about the downsides of the wheel strategy. Quickly going into it, I'm going to be trying to film this video before my battery dies. I'm at 25%. I think I could do it. All right, the wheel strategy, selling options. It's been very popular. Everyone says you can triple your income. It's the triple income strategy. Yeah, super cute. You start off by picking a stock. Let's say you pick Apple. You want to run the wheel strategy with a stock you wouldn't mind owning. When you run this with a stock like Apple, there's not much volatility or premium on it, so you realize you're not making that much money. So you pick a more risky stock, which is what I did, and I'll show you the downsides of that. So with the wheel strategy, you sell puts until you're assigned. If you sell a put and it doesn't get assigned, you sell another and another. And then if you do get assigned, if assigned, shout out to Freedom35 blog. I'm not stealing your stuff. I'll credit you. You sell puts. If assigned, you now own shares. Since you own shares at a discount, ideally because you sold a put below the strike, below the current price, you sell calls. You keep selling calls. Hopefully the stock goes up until you get called away, until you get assigned on your calls. Once you get your stocks called away, you have your cash back, you restart the full wheel, that is one wheel cycle, you sell puts again until you're assigned, and you keep doing this, you keep going round and around, and everything is fine and everyone makes millions of dollars, but it doesn't necessarily work that way. When you do the wheel strategy, oh God, look at AMD. When you do the wheel strategy on Apple, you realize, hey, I don't make that much money. I make $100 a month for like $15,000 in capital. That's not a good return. So you're like, hey, let me pick a stock with more IV, maybe more potential so I can make more money. Well, that's what I did. Take a look at Workhorse. Workhorse, I was selling puts on it, let's say at I think I started at $10. It kept going up. It was going like up and down. I never got assigned. There's so much IV. I was selling I think at $10 when it was trading at 14. And then it went to 40. And when it was at 40, I sold 28 strike calls, puts. So I was like, hey, if it drops to 28, I'll own it at a discount. Well, take a look at this giant bar. So this bar went from 28 to 12. And that was one day. So within just a few days, it went from $42 to $12. They lost their USPS contract. I was in the money. So I ended up rolling it down from 28 to 22 to 20. When it was 20, I was like, hey, it can come back. It was at 40 before. I do believe it'll come back just based on potential. And I ended up getting assigned at 20. I was like, hey, I'll sell the covered calls. I'll make some money. And the shares get called away and everything will be fine. But if you take a look at what happened, it's trading so low at $6.75. I'll never make my money back. And I'm going to be forced to sell. I'm going to sell in December to tax loss harvest. So I'm going to take advantage of this giant loss in order to reduce my tax income, my tax payable. Let's take a look at what I've been doing. I got assigned in March. Sorry, let me zoom in. I got assigned in March. I have for 1,000 shares, so $20,000. I started selling covered calls in order to try to reduce my cost basis. But as you can see, so I rolled it up. So here, this is not necessarily a loss, but it popped. I thought it would keep going. It went up to $17. I was like, hey, it'll come back. Let me roll it up. So I've been selling, let's say, $4.50 here, $5.50 here. Overall, in the last 7 months, I've made $1,747 on it with my cost basis of $20,000. Is that $200,000? Now my cost basis is at $18.25. So if it goes back to 18 and I sell, I'll be able to break even, but it'll never get back there. I'm convinced. It's at $6. It's not going to triple. I'm just going to cut my losses and run. This is the downside of the wheel strategy. Take a look right here. I own 1,000 shares. I got assigned at 20.8. I don't know how that happened. I think I had some shares from before. They have their earnings tomorrow. I don't think they're going to do well on earnings, so I'm just going to roll it in front of you guys now. So I sold these calls at $8, and because they have earnings tomorrow, the IV, the premium on all your calls, on all your options are a little higher, so I'm going to roll this in front of you. I am at a $14,000 loss. With the 2000, with what did I make? $1,700. So I'm at if this gets called away right now, I'll be at a $12,000 loss, which sucks. This is one of my worst trades ever. This is one of the biggest losses I've taken since the March 2020 pandemic. You can't blame anyone for taking a loss during like a black swan event like that. That's fine, but this is entirely my fault. I was running the wheel strategy. There's no way I can make money. I can make my money back. A lot of people say when you get assigned to sell at your cost basis, I can't make money selling at 20. Look at what happens when I sell at $8. I'm only making 30 cents or $3 a contract if you do times 100. Or $30 a contract. There's just when a stock, you only do this on stocks you want to own, but then you have to do it on a stock that you're bullish on. This only works if it goes up. So I'm going to roll this in front of you. Let's see what my final income would be. So if I go here, let's go custom add a call. I'm going to get these called away. So you have to buy back the exact calls you sold. So I sold the 8s. I want to get these called away. I'll sell December 17th. I'll sell the 7s. So I should be making, let's say, $640. $640. We'll do that. And I'll add 640 here. So if they get called away from me at 7,000, my total loss will be $10,613. This is the downside of the wheel. If the stock goes down, it can't recover. You can't sell calls at your cost basis. I'm going to sell these no matter what. Hopefully they do get called away at $7 so I can tax loss harvest. I'm going to show you why I want to tax loss harvest. Because I have a $55,000 gain on my Tesla Leap. I'm going to sell this and do something else with Tesla. I need to figure out what to do. I'm probably going to close a lot of positions in December just to get my tax situation in order. So I'll be selling this in December, regardless of what happens, and then use some of those Workhorse losses to offset. But that's, I don't know, nothing really I could do. Nothing else I could do. If we take a look, just go back to Workhorse, which is the wheel strategy. There's another one I was doing the wheel strategy on, which is AMD, but then AMD keeps popping. So this is another scenario. AMD has gone up so much. You would have, if you're running the wheel on it, you would have got your shares called away. In the past, so October 1st, it was at $100. So in the past 38 days, it's gone up 50%. The wheel strategy works in a sideways market. If everything's kind of slowly increasing or slowly decreasing, if everything's going sideways or small increases every day, you'll be fine. But when you have this, what is this 10% bar in a day, sometimes you end up missing out on income, which is what happened to me. As you can see, I was trading strangles on it. It was trading perfectly within this range going sideways until it decided to moon. And now I'm just busy managing it. But so going back to Workhorse and the wheel strategy, it works if everything kind of trades sideways and if there's a good premium on it. I tried doing this with Apple at the beginning, but there's just no money on it. You make $100 a month, which is not that good. It's not that good. It's not worth the $15,000 in capital you're tying up. So yeah, just play with this. This is not the be all end all strategy. I think the buy and hold might work out more if you're on, if you're trying to do a stock like AMD that would increase. If you're trying to do something else, where's Mara? Mara up 17% today. I don't really know why. Look at this this gap. I know Bitcoin is up 4%, but then why did Mara? I know they're like a mining company, but I don't know why they popped 17. So take this with a grain of salt. A lot of people are asking me about the wheel strategy. Should they do it? Oh God, the sun is out. Sorry for the quality. A lot of people ask me about the wheel strategy. It's good for beginners. It's not the be all end all. It's, you won't make that much money in a bull market because you'll constantly get your shares called away if you had shares, or if your puts never get assigned, you might have made more by holding the shares itself. But yeah, that's a long-winded way of telling you I'm down $10,000 in what has been my worst trade ever. It is kind of frustrating, but you live and you learn. Not everything can be a winner. I haven't had a loss in a while, and I guess I was due. So thanks for watching. Let me know if you have any questions. Sorry for the sun coming out. My battery's dying. Tune in to the next one.